Good morning. It's Tuesday, January 7th, about 6 a.m. Central Time. 32 degrees down here in Florida. So a real quick check on natural gas prices, down about 3% overnight here. And this comes after being up 33% for the past month. So natural gas, generally the contract that I trade, $1,000 for every $1 move on there. You can layer in a few of those as natural gas tends to be a little bit volatile. They do have another contract that's $10,000 for every dollar move. That one I prefer to use the option markets as opposed to the futures markets, just because of trying to get the timing specifically right on natural gas, as it tends to be a little bit volatile right now, especially when they're flashing polar vortex every 8 seconds on the Weather Channel. Now, shifting gears here to the precious metals markets, they are higher after yesterday's volatile trading session. We saw wild swings in the markets here yesterday. Yesterday, when I reported on the Metals Minute, that was at the time when the Washington Post stated that the tariff plans would be applied to every country but only cover critical imports. So we saw a massive rally across risk assets and a collapse in the U.S. dollar index, a sell-off in gold as traders piled into everything from copper to grains to U.S. equities. And of course, a short time later, Trump discredited the Washington Post story, saying that it was fake news. So one thing to note is that if we're going to get breaking news headlines, we're probably going to have to look and see what is the correlation between Donald Trump and that particular news outlook, and see if he's going to come out and say something like that later. So if it would have been Fox News reporting something like that, perhaps the rally would have stuck a little bit stronger on some of these things. Just saying, not trying to get political here. This is a lesson learned for myself in my own thing. So a lot of times I do this particular video just to try and improve myself and my own process here. Now, many of you working closely and have accounts with BlueLine Futures were notified and reduced certain commodities on that report coming out, knowing this could be the possibility of that type of development, especially the ones buying the dip on copper. We also reduced some of the exposure on Bitcoin after adding that in the low to mid 90s, and then oil futures we added on the breakout. We did reduce just a bit of oil exposure. The breakout on oil was right around $71, and we preferred to play the March contract, as when I go out to oil, you do get the benefit of the farther out you go, the cheaper that contract is. And then also, if you stay within the first 3 months, any kind of geopolitical headlines that break, you should be able to benefit from that as well. If you'd like to explore opening up an account with BlueLine Futures, please send an email to info@bluelinefutures.com and note that you're interested in opening up a trading account. Now, shifting and looking to the overnight price action and the setup for the day here, starting off with the precious metals sector, gold futures just off the high of the session, up $12 at $26.59. Low of the section, $26.4350. High of the session, $26.60. Pushing on to the silver market, $30.86 last, up 27 cents. The high of the overnight session, $30.88. Low, $30.41. So nice about 1% move in the silver market. Looking at copper, extending the gains, but still a little bit lower than the best gains we saw here yesterday, up about 2 cents at $4.18. High of the overnight session, $4.20. Low, $4.14, up about 0.5%. Remember, copper has really been weighed in by China and any kind of weakness in China that's been out there. So we'll want to look at some of our attention to China if we're going to start looking at copper and adding copper at higher levels, because of the fact that it's disappointed so oftentimes. Now, I should be on CNBC later on here today, right around about 12:15, 1:15, somewhere in that time here. We got to firm up the time, and I'll probably be covering either copper or silver. Looking at platinum, that's your best performer, up about $19 at $9.62 last. That's a 2% move. And the gold-silver ratio, remember we discussed when it was at about 89-90 to 1 that I was getting a bit stretched? Well, that thing corrected back down and is about 86 to 1. So shifting and turning our attention to some of the outside markets, oil futures continuing to extend its gains. Natural gas prices just a touch lower. Bitcoin futures coming off of that 103,600 mark, trading right at around 101,700 last. U.S. equities a bit lower here, and a bit of a disappointment because of that CES that's going on right now with the NASDAQ. You got NVIDIA shares, they were up quite a bit here in the overnight session. Same thing with Micron and things like that. Dollar index coming off, still weakening up. some of the foreign currencies lifting up, and we did take some short positions on some of the agricultural products here, and you've got corn and soybeans just a bit softer in the overnight session. So that's how your outside markets are playing out. Now, a note on the gold market here. China's central bank expanded, and this is why I think that gold futures are up right now. China's central bank expanded its gold reserves for the second straight month in December, signaling a renewed appetite after temporarily pausing purchases last year as prices soared. So the bullion held by the People's Bank of China rose to 73.29 million troy ounces in December from 72.96 in the previous month. That was according to data that was released here in the overnight session. So remember, they did take about a 6-month pause, and we saw gold futures pause with it. So here's your leaders here in the overnight session. You do have platinum up 1.94%, orange juice up 1.5%. 32 degrees in Florida. It's probably impacting the OJ crop. Just saying it out there. No guarantees on that. Palladium futures up about 1.27%. And you got oats up 1.21%. That's a market that tends to trend for a while and has turned around and turned a corner here. I saw a lot of clients. They were purchasing the oat contract with stops below that $3 level because on a multi-monthly chart, that would be a new violation. Now, looking at the Fed's path forward with the CME's Fed Watch tool, you got expectations only a 6.9% chance that the Fed does cut rates at that January 29th meeting. Now, looking at some of the economic data releases that are due out today, you do have FOMC member Barkin, he speaks, and then you also have the trade balance data. Now, this is the big one, the ISM services PMI data, expecting 53.5, 52.1 was the previous month. So look and see if we get this expansion of the services data. Services are like things that somebody sitting at a desk would provide here. Now, JOLTS job openings, that's another one to look at here. 7.74 million was the previous, 7.73 was the last one. You want to see, if you want the economy expanding, you want to see job openings actually increase because of the fact that companies are continuing to expand hiring, not necessarily decrease because of the fact that they're tightening up the belt. And then also we'll get a 10-year bond auction. Now, looking at some key technical levels and focusing on today's probable trading ranges. Gold, if I was looking at it from a bullish standpoint and I needed a risk management strategy, not a specific recommendation out to the public, I'm just saying that I would define my edges here in yesterday's low, 26.2460. You probably don't want to see prices trade below that level. And the tactical, if you get the metals edge, the tactical support level is 26.29. So it's nice to see that where volatility should stop on a sell-off is 26.29, and that you're able to get that support level below yesterday's low, a critical level of support. Now, your upside probability was 26.64. We're closing in on that right now. So what I would do is ratchet up to the level 2 on your probable range. That's 26.81, but it also correlates with the 50-day moving average, which is at 28.60 or 26.8160. So that's a level that I would probably look to reduce a little bit of positions there. Remember, there are 10-ounce contracts. You could layer in, you can layer out, things like that. So you add on risk, you take risk off, things like that. So looking at the silver market, nice turn up on the silver market as well. So your first level on the tactical sell level would be 30.93, but the fact that we're closing above it, the fact that we've got great momentum, everything's in the green across the board, dollar index a bit lower, you got 2-year and 10-year treasury yields just a touch lower here today. I would look to use that second level there, which is 31.38. Remember, 31.70 is going to be your trend reversal point. Again, I'll probably be on CNBC. We'll tweet that out here later on today. I'll also post it in the research as well in the Metals Edge. Be sure to get that as well. So got any questions? 312-758-8908. So we'll see what happens here with some of these markets. But you got any questions, again, give us a call. Remember, futures and option trading does involve risk of loss, may not be suitable to all investors. Good luck, good trading.